Good Tuesday morning. Welcome to today's episode of Morning Well. Three things that we will touch upon. China on the rise, service sector ISM numbers from the US, and RBA, which is your Reserve Bank of Australia's meeting later today. US stocks jumped on Monday following the holiday weekend, lifted by shares of everything from medical technology companies to banks. Tech stocks led by fresh records of Amazon and Netflix nudged sentiment higher and also pushed Nasdaq to a new record high. All sectors were positive except for utilities. That was even as data continued to point to a rise in coronavirus cases in the US. The 7-day moving average of daily COVID cases in the US climbed to more than 48,000. At least part of the stock's recent gains appear to stem from the fact that the US will avoid having to reinstate widespread restrictions on business. Elsewhere, the stock 600 rose 1.6% after data showed German factory orders rebounded 10.4% in May after falling sharply during the lockdown in April. The increase was driven by both domestic and foreign orders as economies around the world began to reopen. Their data also showed Eurozone retail sales were stronger than expected in May. The dollar fell against the entire G10 basket. Treasuries barely moved. The 10-year yields were hovering around 0.68. WTI was flat. Gold climbed. Asian equity futures are pointing to a mixed open. The Shanghai Composite Index soared about 5.7% to its highest level since early 2018. An analysis in Bloomberg that I found interesting is as follows. As the diplomatic tit-for-tat escalates between Washington and Beijing, millions of Chinese investors, defiant and patriotic, are once again engineering a fast and furious bull market on their home turf. 2 years ago, when the trade war first hit, China's 8.5 trillion stock market sank into one of the deepest bear episodes as worries about the economic damage of decoupling took root. This time around, tension with the US hasn't even made a dent. Rather, mainland shares are on fire. The benchmark CSI 300 index has rallied 14% this year to trade at a 5-year high. The S&P 500 by comparison is still in the red on a YTD basis. Daily trading volume has exceeded about 1 trillion yuan, which is about 142 billion, for 3 consecutive trading days. China market analysts said that it's hard to pinpoint a single clear driver for Monday's surge, though some pointed to a front-page editorial in a state-owned China Securities journal. It said fostering a healthy bull market was important. The bullish sell-side analysts are tossing around buzzwords like national champions, import substitutes, and capital market reforms. Ultimately, these boil down to the idea that turning inward is good for stocks. On the equity side, Uber estimates that it will issue about 84 million shares of common stock for the 100% fully diluted equity of Postmates. The all-stock deal is actually a modest outcome for Postmates, which had been valued at 2.4 billion last year. Uber plans to keep the Postmates app running separately, supported by a combined merchant and delivery network. Microsoft has expressed interest in acquiring the games division of Warner Brothers. Warren's parent AT&T hasn't yet decided whether to sell the unit. Shares of Becton Dickinson rose about 2.2% after the company said it was launching a rapid diagnostic test for the new coronavirus. So they have won the US approval for a portable test that would give results in about 15 minutes. Lastly, on the Forex side, the latest ISM non-manufacturing index, service sector activity accelerated last month as large states reopened activity. This improvement is consistent with Thursday's better than expected non-farm payrolls report. However, the uncertainty lies in not what happened in June, but how businesses and consumers will behave in July when virus cases are on the rise. Delays in hiring and investment seem to be very likely going forward. Euro was the best performing currency on Monday thanks to the ongoing signs of recovery. Eurozone's retail sales jumped about 17.8% in May, which is more than expected. Although the rebound in factory orders was less than forecast, a double-digit increase was still seen. More importantly, in contrast to the US, there's a much better chance that these improvements in economic activity will be sustainable, as there are no talks of a second wave and lockdowns in the Eurozone. The Australian dollar will be in focus later today. RBA's monetary policy announcement is on the calendar. RBA is widely expected to leave policy rates unchanged. The question is whether they will tamper with the outlook for the economy and also their opinion on negative rates, which will be keenly watched. Something that we will look to hear later today. Stay safe and healthy, everyone, and speak soon.